What if you could trade Bitcoin with leverage without selling your Apple, Tesla, or ETF investments? Sounds impossible, right? Well, that's exactly what one of the world's biggest cryptocurrency exchanges has just made possible. Kraken has announced a groundbreaking feature that allows eligible users to use tokenized stocks and ETFs as collateral for leveraged crypto trading. Instead of selling your investments to raise cash, you can now keep holding them while using their value to trade cryptocurrencies. This is much more than just another exchange update. Many experts believe it represents another major step toward bringing traditional finance and blockchain technology together. In today's video, we'll explain exactly what Kraken announced, how tokenized stocks work, why this is important for investors, what risks you should know about, and how this could shape the future of global financial markets. So stay with me until the end, because this announcement could change the way millions of investors manage their portfolios. What exactly did Kraken announce? Kraken revealed that eligible users can now use tokenized stocks and exchange-traded funds, commonly known as ETFs, as collateral for leveraged cryptocurrency trading. Normally, if you wanted to open a leveraged Bitcoin position, you would need to deposit cash or cryptocurrencies such as Bitcoin, Ethereum, or stablecoins. Now imagine you own tokenized shares of companies like Apple, Microsoft, Nvidia, Tesla, or popular ETFs tracking the S&P 500. Instead of selling those investments, Kraken allows you to keep holding them while using their value as collateral. This gives investors much more flexibility because they no longer need to choose between keeping their stock investments or participating in crypto trading. For many traders, that's a huge improvement. What are tokenized stocks? Before we go any further, let's understand what tokenized stocks actually are. A tokenized stock is a digital token on a blockchain that represents the value of a real-world stock. Think of it as a blockchain version of a traditional share. If a token represents one Apple share, its price generally follows Apple's stock price. Instead of existing only inside traditional brokerage systems, these assets exist on blockchain networks. Because they're blockchain-based, they can potentially offer faster settlements, greater accessibility, and easier integration with crypto platforms. Many financial institutions believe tokenization could become one of the biggest innovations in finance during the next decade. Some experts even predict that trillions of dollars worth of real-world assets, including stocks, bonds, real estate, and commodities, could eventually become tokenized. Why is this such a big deal? At first glance, this announcement may sound like just another trading feature, but in reality, it has much bigger implications. Traditionally, if investors wanted liquidity, they often had to sell part of their portfolio. Selling investments can have several disadvantages. You might miss future price gains. You could trigger taxes depending on your country, and rebuilding your position later may become more expensive. Kraken's new feature solves many of these problems. Instead of selling, investors can simply use their tokenized assets as collateral. This creates a much more efficient use of capital. Your investments continue working for you while also helping you access crypto trading opportunities. This is exactly the kind of innovation many professional investors have been asking for. What is leveraged trading? Now let's quickly discuss leverage. Leverage allows traders to control positions much larger than the money they actually deposit. For example, imagine you have $1,000. With 5x leverage, you may control a $5,000 trading position. If Bitcoin rises significantly, profits become much larger. However, if Bitcoin falls sharply, losses also increase much faster. That's why leverage is considered a high-risk trading strategy. Kraken's new collateral feature does not eliminate these risks. It simply changes what assets can be used to support leveraged positions. So investors should always understand liquidation risks before using leverage. Benefits for investors. This feature offers several important advantages. First, investors don't have to sell long-term investments. Second, portfolios become much more capital efficient. Third, investors gain exposure to multiple markets at the same time. For example, imagine someone believes both Nvidia stock and Bitcoin will perform well over the next few years. Instead of selling Nvidia shares to buy Bitcoin, they may now be able to keep both positions. That creates much greater flexibility. Professional traders often look for exactly these kinds of opportunities. The risks you should know. While the feature sounds exciting, it's important to understand the risks. Leverage can magnify losses. If crypto prices move against your position, Kraken may liquidate your collateral depending on account conditions. Tokenized stocks themselves may also fluctuate in value. So if both your stock collateral and crypto position decline simultaneously, risk increases. This feature is generally better suited for experienced traders rather than complete beginners. Risk management remains the most important part of successful investing. Why tokenization is becoming so popular. Over the past few years, tokenization has become one of the hottest topics in finance. Major banks, investment firms, and blockchain companies are investing billions into tokenization technology. Why? Because blockchain can reduce settlement times, improve transparency, lower operational costs, and increase market accessibility. Instead of waiting several days for transactions to settle, blockchain systems can often process transfers much faster. That's one reason many financial institutions are actively exploring tokenized assets. How this fits into the bigger crypto trend. Kraken's announcement doesn't exist in isolation. During the past year, we've seen many signs that traditional finance and crypto are moving closer together. Bitcoin ETFs have attracted billions of dollars. Large asset managers are entering digital assets. Governments are working on crypto regulation. Banks are experimenting with blockchain technology. Financial institutions are increasingly discussing real-world asset tokenization. Kraken's new feature is another piece of that larger puzzle. The financial system is gradually becoming more digital. Could other exchanges follow? Whenever a major exchange launches an important innovation, competitors usually pay attention. If Kraken's feature becomes successful, it's possible that other exchanges may introduce similar services. Competition often drives innovation. Investors generally benefit because exchanges continue improving products to attract more users. Although no one can predict exactly what competitors will do, this announcement could encourage broader adoption of tokenized assets across the crypto industry. Final thoughts. Kraken's decision to allow eligible users to use tokenized stocks and ETFs as collateral marks another important milestone in the evolution of digital finance. Instead of forcing investors to sell their traditional investments, the platform gives them a more flexible way to participate in cryptocurrency markets. It's another example of how blockchain technology continues to reshape global finance. Of course, leverage always carries significant risk, and this feature won't be suitable for everyone. But there's no denying that tokenization is becoming one of the most important trends in modern investing. As crypto and traditional finance continue to merge, we'll likely see even more innovations like this in the coming years. If you enjoyed this video and want to stay updated with the latest Bitcoin, Ethereum, Pi Network, and crypto news, make sure to like this video, subscribe to Shabanverse, and turn on the notification bell so you never miss an important update.